Boom! What's going on, guys? 360 Digital Closing Bell, daily energy market summary, episode number 140 here on this gorgeous Monday, October 19th, 2020. As always, I'm your humble correspondent, Michael Tanner, joined by the executive producer of the show, the purveyor of the show, the director and publisher of the world's greatest website, oilandgas360.com, and international man of mystery, Stuart Turley. How you doing today?
It's a beautiful day in the neighborhood, and you're well underpaid.
Well, I appreciate that. We're going to bring in a guest host here to talk all about the ConocoPhillips deal. But first, guys, we will cover everything that happened both in the equity markets. We'll look at Halliburton earnings coming out for the third quarter. Actually, halfway decent here when you look at some of the numbers. Natural gas, weather, forecast turn on us, so we see a little spike there. We'll cover everything that happened in the crude oil levels today, equities markets. But first, guys, just subscribe. 360 Digital Closing Bell, iTunes, Spotify, YouTube, the best way to stay up to date on all of your energy finance stuff. And when we look at the overall markets today, I mean, really, we're back to coronavirus driving everything. First, it's been stimulus, and now with this cases being uptick, that's really what caused markets to move today. Markets were actually up early in the trading session of hopes that a new stimulus package would come out. The quote was, we have 48 hours to hopefully get a deal done. And the sentiment of the Washington Post was that a deal was imminent. Well, as the market turned about 12 o'clock, the Washington Post re-released their report and said that it looks like the deal is not imminent. That drove markets down over 450 points, with the Dow finishing down about 410 points, about 1.5% below. SPY was 1.6 percentage points on the downside. Tech stocks down over 1.8 percentage points. As stimulus talks go, so are these markets going to go. And especially if we, as I mentioned, continue to see an increase in the number of cases, specifically on the East Coast, not going to continue to do well. So back to red selling. Crude oil had itself an okay day, 78. So it's about 0.8 percentage points on the downside, but staying fairly flat. 12-month strip about the same, 42.55. Natural gas up about 2.7 percentage points, $2.84 for that front month contract. Back into the curve, $2 or $3.08. So that's about 0.8 percentage points there. So we're seeing some structural movement. I think that has a lot to do with some of the weather models that turned, as we'll get into here momentarily. But the XOP contract was down 2 percentage points today, finishing second in terms of lost leadership, 42.67. OIH, oilfield services, relatively flat, only lost 11 cents or down 0.1 percentage points, down to 96.99. When we look at our individual indices, we had some wacky numbers on the day, so kind of filtering out some of the large movers. Camber Energy, 11% on the downside, 81 cents. Permian Royalty Field Trust, little ETF to get your hands on, 52 cents, about 12.7% on the downside. And Gulfport Energy, off the back of bankruptcy, down 16 percentage points, 22 cents. On the upside, some decent numbers. Goodrich Petroleum up 3.5 percentage points, $9.49. Prime Energy Resources, an offshore player, 62.50, up 5.06 percentage points. Barnwell Industries up to $1.06. They're 6.2 percentage points. In terms of they are a nice little mineral construction company you get your hands on. Stu, what do we have in the international news desk today?
Hey, Michael, we got a couple things. First off, we've always said that we want to get as much power as we can to the people. Let's get people out of poverty. Let's be good stewards of our planet. Let's get the cheapest kilowatt per hour out there. Story ran on the news desk. Nigeria is seeking $2.5 billion to fill their electricity gap. To get power to their people. The sad part is there's 80 million Nigerians without power. They have just surpassed India as being one of the most prevalent nations in the world without power. So our hearts go out to them, and let's see if we can get them some power. With that one, let's go back. I got three more stories coming up here. First, our beloved friends in Libya. You got to love that. They had just hit 500,000 barrels last week, and they are now projected at 1.2 million barrels per day coming up in another 4 or 5 months. After Turkey got them set up on that. That feeds into this next story. Saudi accrued. We're talking Saudi has exported 5.9 million barrels per day, but their production is 8.9 million barrels per day. And then you talk about the last one here, were saying that Kremlin has had 2 talks with Saudi today. They're trying to curb 7.7 million barrels per day in all of these. The bottom line, OPEC, OPEC plus, Kremlin, and Saudi, nobody can smack anybody around because there's way too much trying to produce.
And these long-term supply issues continue to linger, but Stu, the oil market's continuing to pound them off right now. I mean, we're still currently trading above $40 right here. So, while I agree with you, what's interesting is I'm not sure if that current front month contracts reflect, which is interesting. I think people have sort of, I think a lot of traders understood. We don't think OPEC's going to be able to curve it, regardless if they want to.
No, there's no way. There's not a newspaper big enough for them to roll up and smack them in the nose. There is a supply problem coming around the corner.
There is. And, you've been teasing these peace deals. Do we have any update on those?
I had one of my sources come through on one. We may see one this week.
Okay, we'll be looking for that. Before, guys, I think we'll go ahead and move into the shale patch before we cover the obvious ConocoPhillips Concho deal. First, Halliburton did drop third quarter earnings today. Sort of a mixed reaction. The market was fairly flat on them, only traded them down about 0.6 percentage points, considering the fact they actually did produce a net loss of about $17 million, which is not terrible. You also got to remember they cut 15,000 employees, so to think about what they were able to pull off with sort of a smaller workforce is actually fairly incredible here. Total revenues were about $3 billion, operating income $275 million. Kind of look at a breakdown. They did about 1.6. No. I'm looking at geographic here. North American revenue was 984 million, 6% decrease compared to the second quarter. What was interesting, international revenue, $2 billion. That was a 7% decrease between the second quarters. Actually saw a little bit of a less of a hit North America versus the international, which is kind of an interesting sign. That was kind of the reverse of what we saw at the beginning of the year here, as this coronavirus stuff really affected the U.S. stuff. We saw, especially on Schlumberger earnings, the quarter one, quarter two hold up a little better on the international side, but interesting to see Halliburton losing or dropping a little more in their international than they do on their regionals. When we look at just kind of a couple things that were moving oil markets today, as Stu mentioned, these long-term fundamentals, they're looking, it's very interesting. And right now, I think if you're trading oil and gas, really the sentiment is, where COVID-19 goes and where some of this news goes, that's where some of these markets go. When we move over to the natural gas side, weather markets did turn last night. As we covered on Friday, there was, a lot more of a colder sentiment continuing to swing through here. NGI dropped that. We also are seeing a barge was obstructing the Calacuza ship canal. I couldn't tell you what that is. The key, though, is that's 3 to 4 weeks backed up. That's about 300,000 MCF of LNG production is going to be taken offline. Part of the reason why we're seeing about 2.5 percentage points increase on that. When we look at the nat gas weather reports, 19 through the 26, colder conditions are supposed to linger across the Midwest and Ohio, pretty much with the 30s to 50s. So that colder weather we're here in Colorado, that's kind of happening all throughout the Midwest. Again, it's going to be bullish when we're talking about natural gas. And I think outside of, really there was obviously one big news item today, and that is the ConocoPhillips acquiring Concho. And what I want to do is I actually want to bring in President of Entercom, Aaron Vanderford, to actually talk about this, because, part of what he covered, we talked about him with him on Friday, so what the deal terms look like. And really that was what our conversation lent itself was. Okay, great. This news leaked. What are the deal terms? We're only going to be able to evaluate the deal once we know the terms. And guess what? The deal terms are out here. 1.46 shares of ConocoPhillips to each Concho shareholder. 15% premium based upon October 13 prices. The company creates the largest independent oil and gas company with 1.5 million BOE per day. They have an expected cost savings of $500 million by 2022. Concho in a presentation this morning with ConocoPhillips executive said that they have about $600 million in expected cash flow. CEO of Concho, Tim Leach, becomes the executive vice president and president of Lower 48 for ConocoPhillips, and is also appointed to the board of directors. Aaron, when you hear all this stuff, we mentioned the terms of the deal were going to affect whether it was a good or bad deal. Now we know. Do we like it? Do we not?
I think it's an interesting deal. I think it does prime the pump for future deals to get done. I think a couple of the interesting points that came to mind, 15% premium is not a huge premium. There's certainly a little bit of some marketing in there, but it's not a zero premium deal. And so it may signify a little bit more of a healthy M&A environment. Certainly, a lot of the pro forma analysis I've seen on debt metrics, it's going to be about a one-time debt to EBITDA type of company when they close this thing. So it's lightly levered, certainly accretive to cash flow. I got one analyst estimates today, John Gertis, who we love, who was at our conference talking about between 2021 and 2025, the new ConocoPhillips generating $20.3 billion in free cash flow with his price estimates, which is 45% of the market cap of the company. And so, these things tend to work. If we can see some stability in oil prices, and certainly size and scale gets us there.
Yeah, no, I think it's really fascinating. I think, like, we mentioned it was the premium. I think an all stock deal and this type of premium is kind of where the market's going. What I found interesting is generally and when we talk about how is this going to affect oil markets, super majors generally don't hedge as much production as you would think they would. They actually generally their upstream stuff they consider their riskier part of their portfolio, so might as well just let it ride. If oil becomes $100, great, we make a lot of money. If not, we can weather the storm elsewhere. So when you talk about ConocoPhillips getting in and buying Concho is the 5th largest hedge producer out there right now. If they begin to unwind some of that hedge book, watch for this, specifically in the options market. Watch for some really depressed values. This could turn oil prices even just slightly, maybe 50, 75 cents on the downside, considering the fact that there could be a decent amount of contracts being dumped off the market. So I thought that was a little interesting nugget. Gotta love Twitter giving us all this stuff.
No, Michael, that's a really good point. And, we've always seen the majors, the investment in a Exxon, Conoco, Chevron has been, as an investor, I'm buying really the commodity, maybe a proxy to the commodity, a little bit of a catalyst from some of these things. And so, a shareholder that was in Concho is now getting a little bit of a different flair, and it'll be interesting to see the churn that comes up from that. But certainly the hedging environment will be different from what Concho did to what ConocoPhillips does. One of the other things that I thought was interesting in this morning's call, listening to management, and certainly a large topic of discussion was the ESG.
Yes, I was going to bring that up next.
Yeah, as we talk a lot about ESG and what we do at Entercom, and we've been preaching this, in the M&A environment, you're not just buying the company, you're not just buying the assets, you're also acquiring an ESG. And so whatever the Concho was putting in place certainly was well received. I think puts Conoco in not that they were in bad position, but even in a better position on some of the projects that Concho had been doing. And so certainly that ESG piece is important. And now, Mr. Leach gets to integrate the lower 48 team, and that's a big part of the S. When you start thinking about the E, the S, and the G, more and more of these mergers are going to happen. There's a big social component and cultures that you're going to have to merge, and there's a lot of work to be done there. So not time to go pop the champagne yet, I'm sure, for Mr. Leach.
Yeah, they say they're the first U.S.-based oil and gas company to come out with to lead to the adoption of the Paris-aligned climate risk framework, which is apparently to be adopted by this joint entity. So, their goal is net zero by 2050. It's still a long way out, but that's for a shale company who's taking a huge stand in shale. That's a big commitment right there.
It's a huge commitment, and I think that there's a lot of unknowns between here and there. I think directionally we see companies doing this, and we'll have to see, what the regulatory environments, all those things that lay out between now and 2050 or 2035, depending on where companies are talking about. But certainly interesting to be talking about ESG in the context of a merger for sure.
Yeah, and just to kind of go back to our hedging thing, watch out, guys. I'm telling you, if you're getting in on trading oil here, quote, we like to see our investors complete upside to recovering price. CEO Ryan Lance. That means they're unwinding the books, baby. So watch for the back end of that options market to get crazy. Stu, you've been a little silent here. What do you think of this deal?
I think it's an interesting one. I think it's also going to set the tone for total and utter chaos in what we can expect in standard M&A deals. It's all bets are off.
So, Aaron, I want to toss this to you for a second, because I think one of the takes you can take is, I think when we talked about an M&A market that was heating up, I think we all talked, as we, May, June, as we moved into July, I think a lot of people, specifically, including us, we're saying M&A's heating up a little bit. I think a lot of people expected Concho to kind of take a baseball reference to kind of be a buyer at the deadline here. But instead they turn selling and actually go that way. Do you think this is I think one analyst I saw took the approach that this doesn't bode well for a really small cap company we're hoping to get swooped up. Is any room along that? I mean, I would have thought, personally, Concho would be a buyer at the deadline here.
Yeah, no, I think that a Concho was playing both sides of the fence, and they opportunistically found something that fit something of a larger size. And so I think when the majors take a look at what they could buy, that universe gets a little bit smaller. And so I think that conversation happened. Now, certainly, Concho, they bought RSP not too long ago. They've been a buyer in this market, and I think that they probably could have played that role. There are certainly some others out there that may be in that role. I look at like a EOG or a Cinerex or some of these others that could play that role. And I think there's some natural folks that would like to be the sellers in the merger of equals types of things. So I think we're going to see a lot of those play out, and I think people will have as many conversations as they need to have to get comfortable. But they're not going to close off to one way or another.
Yeah, any talkative bankers, more than happy to email me, mtanner@intercominc.com. We'll take all the tips you can get. I'm just kind of rolling over some of the numbers here. I mean, 1.5 million barrels of crude oil, of tight U.S. oil production. That's a big number right there. They have the ability to do stuff. They also said they're going to monitor about all of their processing sites, which encompasses about 2/3 of all U.S. production. So that's pretty good. Yeah, I mean, like I said, I think we'll see how this deal turns out. Stu, are we missing anything on the news desk today?
I don't think so. Got a bunch coming down the pike this week.
We do. So I think with that, guys, we're going to go ahead and get out of here and let you guys get back to work, finish up your day. Thank you for checking out the 360 Digital Closing Bell Daily Energy Market Summary here on this gorgeous October 19th, 2020 here on this Monday. For Stuart Turley, Aaron Vanderford, I'm Michael Tanner. We will see you guys tomorrow.